Hi traders, a very good evening. So trader, let's do a post-market analysis of Nifty, and how we could have traded in Nifty. So traders, let's start. So this is Nifty 55 minutes time frame. So traders, the market opened at around this level here. So these two horizontal lines are the day high and the day low and the day high of yesterday, that is 5th June. So today that is on 6th June. So the market opened here. And if you look at the first 5 minutes candle, so it tried to go down, but it received some buying from here and then go up. So essentially it was a range bound candle, so it was a doji with a small body. So traders, this candle does not suggest any entries, so the next candle, if you see here, so it was a red candle, so it was a red candle, but even after this red candle closes, uh, an entry on the downside cannot be uh, thought of, because of this wick rejection from the downside, which was seen earlier on the candle. That means that aggressive buyers are present at this level, and traders, even if this is a red closing, it is not wise to uh, go for a trade on the downside at this point of junction, because if you see the previous candle, it has received some buying in the morning, and if you see yesterday also, it is exactly from this level the price has received buying yesterday in the morning, if you see here, and in the closing stages too. So traders, even after this candle, no entry would have been triggered. So third candle, if you see here, it tried to go down, but it received big rejection for the downside and then went up and formed a bullish candle. So traders, in this as soon as this candle closes, so an entry on the upside can be triggered. So it has to be a quick scalping trade, so we are expecting the stop losses of the shorters to hit and the market to give a push on the upside. So just, it is basically a stop loss hunting move. We are entering on the direction where the people are trapped. So this bullish candle, it has trapped the people who would have shorted, and the market went up, hit taking the stop losses. So after it had done, after this candle closed, so this is a very interesting candle. If you see, after this strong bullish candle, we see a candle inside the inside the range of this candle. So if I just mark the high and the low of this candle, this green candle, and you see this candle here, so this candle, so it is a red doji just inside the green previous candle that had formed. So we know traders that dojis either mean continuation or reversal. So whenever a doji forms, an opposite color doji forms, so it's time to be careful and see traders. So after this, what happened? So the next candle opened at around the low of the body, it tried to go up, it could not even break the high of this doji, and then came crashing down. So traders, when this candle was forming, or after this candle closed with a full body, an entry on the downside can be triggered, you know and in the view that the market can go down, our first target will definitely be around this support zone, which was the day low of yesterday. And we could have booked some and then trail the rest, in the view that if this level is taken out, then we can see a down move, a very good down move, for the day. So it is exactly like, something like that happened. From this point onwards, the market came down. So traders, and whenever the market comes below this the day previous day low, it fails below, then we can assume that the market is weak. And in these kind of markets, every bounce is a selling opportunity. So traders, after this down move, we can see the market went up here, it got some weak rejection, and then it started to come down. So as soon as we see weakness in the market in this kind of price action, we can, if we are an option buyer, we can buy P. If we are an option seller, we can sell C. So if you trade in futures, you can short futures. So so after this candle, if you see that this 10-10 candle, it was a red candle with wick from the upside. As soon as this candle closes, our stop loss can be just above the wick, and then we can initiate a trade on the put side. And every retracement traders, every retracement like these, this kind of retracement are trades to be entered on the downside. So we can make ranges like this. So as soon as this range is taken out, we can enter, So these kind of trending days are very good for the option buyers, as you get momentum. And so traders, after a big trend move has happened, after the market has fallen, let's say from this level to this level here, for about 618, 530, for about like 80, 90 points, 80, 90, 100 points, then we have to be careful on the downside. And we have to look for reversals happening in the market, because the market will not fall in one direction. So if it starts falling in one direction, then everyone will make money in the market. So that is not how the market moves. So traders, some interesting price action happened here, as the market was going down, the price halted here, in this range here, and formed this range here. And if you see this candle, it it was a bullish momentum candle breaking the range, closing at around its high. So traders, in this kind of setups, with a small stop loss, we can plan trades on the opposite trend in the view that the reversal can happen, and this kind of move, when it is happening after 12 p.m. for intraday in index, so there's a probability that the reversals can happen, So in this kind of in this kind of price action setups, what we can do is that first we can go with a 1:1, 1:1.5 target, and we can book some, and rest we can trail it slowly as the momentum is happening. So traders, you see what happened. So price broke this range, went up, it retraced, retraced, and then it went up. Retracement, went up, retrace, went up. So these kind of opportunities, happen in the market. And today after 3 p.m. we got a short covering on the upside. So traders, we as the intraday players, we have to be look for this kind of ranges forming. They can be trend lines, horizontal lines. So from here we can say that market was going slowly up, and then it struck in a range, and then it gave a breakout of this range. So an entry could be triggered, uh, as soon as the market was giving a breakout of this range, or as soon as this candle closes, So this is a bullish momentum candle, and at around the closing, if the market is showing this much of bullish momentum, we can enter with stop loss at the low of this candle, in the view that this momentum can continue, and the shorters are getting trapped. There's a short covering happen, and the market can rally up. So traders, market just closed above this. So this level here, it just closed above, So today was could have been a very great day for the momentum traders, intraday option buyers. So because we saw momentum today in the morning, and in the afternoon also. So two very good moves happened today. So traders, let us also look at the 15 minutes time frame. So this was so I talked about the price action setups, in the 5 minutes time frame. Now let's look at the 15 minutes time frame. So traders, in 15 minutes, a first entry we can get after this candle itself, 9:15, 9:30 candle, So as soon as this candle closed at around this high, we can go with the view that the market can continue the upward momentum, because there is a weak rejection from the downside, and it is a green closing. So we can take a scalping trade in the view that the market can give a quick spike on the upside, traders. So the first trade could be initiated here. So also traders, when the trend is in a direction, like if you see here, so we are seeing lower highs being formed in the market. So in these kind of markets, we should not go for bigger targets. Bigger targets we can only go along with the trend, traders. So traders, if you see this candle here, this 9:45 to 9:15 candle, so it is a very big bearish momentum candle. You see the size of the candle, it is big, and it closed at around its lows. So traders, after this candle closed, so we can form the view that also this was our day low and the support level. So it closed at around the low. We can view that now all the buyers are getting trapped. This candle has taken out all the buyers, and now the market is weak, and the market can rally down. So after this candle, closed in the 15 minutes time frame, we could have entered on the put side. and after this red doji, then again a bearish continuation. So after the price started to slowly move down yesterday's low, which was support, we could assume that the market is bearish and we could have entered with the momentum. So, and traders here in the 50 minutes time frame, we also have this trend line like this. So the market fell down, and then it reversed. It's stuck in a range, and then as it was giving a breakout of this range, we could have entered on the call side too. So also traders, an entry on the 50 minutes time frame could also have been at the closing of this candle, So market has shown a big downside move, and then the market has halted. So this doji is very much interesting, just look at these two dojis that formed, So one red candle, which red doji candle with strong wick rejection from the downside, indicating strong bias present, and this candle received a follow through of the buying, and it was a green candle closing at around its high. So traders, as soon as this candle closed, so our entry could have been somewhere here with stop loss at this level, and we could have uh, scalped, we could have scalped for a momentum on the upside. We could have booked our profits, and then again when the market was in a range like this, and then it gave a breakout, it was giving a breakout, we could have entered the stop loss just below this candle. So traders, this is how we could have traded for intraday today. This are the price action setups that happened today. So yeah traders, so I'm closing this video for now. So let's meet in another video. So bye traders, cheers, have a great day.